Welcome to the May 20th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with a fast-paced tour of the global financial markets and the events this week and what it means for portfolio strategy. First, Dow Jones Industrial Average began the week run in circles, scream, and shout. The Dow fell over 600 points on Monday right there. And that was, of course, trade wars and the pending recession that could occur. And the financial headlines said that prices could go up at Target. Well, then look at this. We went from 26 to about 25.2. The Dow recovers. There was a Friday rally after this chart, took it back to close to 26,000 at the highs of the day. It finished the week about where it started. So before you get diving into salacious headlines that make you make capricious moves, be sure to tune in to YouTube McGowanGroup. Here we go with a broader intelligence read. That's the Dow on a 3-year basis. This is the Chinese index. Look at this. Chinese index, when the trade wars really got started early in 18, fell from 3,600 down to 2,400. 1/3 of the value lost in China as those negotiations heated up. Rallied back some, and now we've given back most of that gain, most of it after the trade wars accelerated when the most recent round of negotiations broke down. What does this tell us? The Dow went from 17 to 26,000. It's more dangerous for China than it is to us. And Xi and Trump would love to get the headline that they've saved the world. If that happens, you could actually break above 27 on the Dow, at least briefly. What do? Well, this chart tells you something about interest rates. The Federal Reserve relentlessly raised rates all through 2018. And this Bloomberg chart in December told us they're not going to touch rates in 2019. Then the probabilities have changed. This is huge. The probability that they'll actually have an interest rate increase in June is 0. There is a probability of a rate cut emerging. In fact, it's more likely by December that the interest rates are back down 0.25% on the overnight bank lending rate, removing that pressure. It tells us that the forward projected rate moves down by 1/3% for the rates on cash. Well, where do you go? Let's look at long treasuries. Bizarre buying this week, concurrent with that Bloomberg report, by the way, that explains this. When you look at the downdraft in the 10-year treasury, well, 2.4% on the 10-year treasury right here. And if we look at what that means for us, this is the 30-year, by the way. The rates fell to 2.8%, 2.4% on the 10-year treasury, just above where the short-term T-bills are. That is a lot of buying in U.S. Treasuries. The Fed probability Bloomberg chart that we just covered tells us why. Where do you go on investments? I want to cover something that has a follow-up to our energy infrastructure. Energy infrastructure pipelines, that's natural gas and oil. And because of the shale revolution, a lot of the oil pipes are at capacity. So far this year, the pipeline index is up 18.5%. The Dow's recovered about 11.5%. Plus, pipelines pay bigger dividends. Cash flow can be worth more when the interest rates are low. So energy infrastructure and global high-yield bond funds that pay significantly more than a treasury, those are the two categories that we were referencing back in December, and they're still outperforming. Uber and Lyft may have killed the IPO market, just like they killed all the taxicab market. Okay. Lyft hit a high of $88 at its IPO, and it's fallen as low as $47. An abject failure between now and when the stock came out. So if we go back to Uber, the most recent, these are two of the biggest IPOs this year, we see a high of 45, a brief low at 36, a little rally, but now back closer to $40. By all accounts, both IPOs failed to make anybody any money right off the bat. That says that speculative market is probably not the place to be. I'm Spencer McGowan, President, McGowan Group, NetWorthRadio.com. Be sure to tune in for the long play program, and you can fill out your preliminary client questionnaire at NetWorthRadio.com. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.